This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachardis. Thanks for joining us at XM.com. The week started off with a bang as the aftershocks of the Fed's whatever it takes message reverberated across the FX arena. A sharp spike in global bond yields dealt a heavy blow to the yen, which has been plagued by the Bank of Japan's refusal to consider tighter policy, while the British pound suffered some collateral damage from the sell-off in equity markets. Meanwhile, a retreat in European natural gas futures after the Commission promised emergency intervention and reform in the power market came as a breath of fresh air for the euro amid hopes that fiscal policy is finally riding to the rescue. Eurodollar took one more stab at parity, piercing above it early on Tuesday. Another striking shift came from the European Central Bank. Several policymakers have been beating the drums of forceful rate increases, inviting speculation of a 0.75 point hike next week. Most importantly, ECB officials have expressed grave concerns about the falling euro because as a net importer of energy, a depreciating currency makes power more expensive, crippling growth and fueling inflation. With EU politicians finally stepping up their game to alleviate energy crunch and the ECB ready to roll out the big guns next week to defend the common currency, a short squeeze seems to be brewing in the beleaguered euro. That said, even if Eurodollar rallies up some 350 pips from current levels, it would still be trapped in a downtrend. It was another bruising session on Wall Street. The tech-heavy Nasdaq lost 1% as investors picked up where they left off on Friday, trimming their exposure to riskier assets after Powell crushed hopes of a Fed pivot. Taking a step back, the outlook for equity markets remains rather gloomy. The Fed is committed to keeping rates high until inflation is squashed. The balance sheet reduction process will double in speed this week. Earnings growth is already struggling to outpace inflation, and earnings downgrades are on the horizon as the economic data pulse slows. As for today, the latest CPI readings from Germany will be under the microscope ahead of the inflation print for the entire Eurozone tomorrow. This will be a crucial piece of the puzzle for Euro traders trying to decide whether the ECB will roll out a 0.5 point or 0.75 point rate increase next week, which money markets currently view as a coin toss. This is today's Daily Market Comment. Thanks for joining us at XM.com.